Hi, I'm Sidney McKinnon, MD and CIO of Cadiz Asset Management. And once again, welcome to in the series of all things fixed income. I thought I'd speak today about a significant event on our economic calendar that happened a few days ago. And here I'm referring to the medium-term budget policy statement that was delivered by our local finance minister. Quite an interesting event on our economic calendar, and just taking a step back and understanding, why do we have a medium-term budget policy statement? What's the purpose of a medium-term budget policy statement? And I think it's important to understand this because the medium-term budget statement or policy statement gives us an idea of the health of the finances of our country. It is a checkpoint in the middle of the financial year whereby the finance minister can show us what the health of the finances are of the country, particularly the fiscal finances as we know it and as has been planned and implemented by the National Treasury. I think that's important. It also gives us an idea, or at least the policy statement endeavors to outline the expenditure that's going to be taking place by the National Treasury, and also sets out a framework for that expenditure and spending over the next 3 years or so. So it's quite an important event, and it also is midway through our financial year. And when the budget gets tabled in February next year, well, hopefully, then we'll have finality, and at least we'll have some direction as to which way things are going in the meantime, as opposed to waiting for a full year to hear what the finances are looking like. So today I want to speak about 2 or 3 points, salient points that are important for the fixed income environment, but I think also of interest to you. And the first one is that we saw that the Treasury adopted a lower inflation target, namely a target of 3% with a tolerance band of 1% on either side. What does this mean? All it means is that now, in tandem or in conjunction with our Reserve Bank, they are able to implement and use the tools at their disposal to anchor inflation at this lower rate. Remember, our inflation first was at 3 to 6%, was the band that was set out for our inflation target. And now the target has moved to the lower end of the band. I must stress that this is a target. It doesn't mean inflation is there. Inflation is a little higher than that at the moment. But it does anchor expectations, and I think that's the important thing. It anchors expectations in the broader scheme of things, and it allows the Reserve Bank to implement monetary policy tools to get us as an economy to that 3% most efficient level, if you want to call it that, for us right now. It also brings us in line with other competing countries, and that's part of the reason for having a lower inflation target. And then also, I think we are in a lower inflation environment globally, so it positions us as an economy a lot more efficiently relative to the rest of the world. So that's quite an important step that has happened. The second thing I want to mention is that there has been, and the minister tabled this or spoke about this in his speech last week, greater or more revenue or gross revenue collection over the last period, since the start of the financial year. And what does this mean? It means that the government has collected more revenue, or taxes, to use another word, than it anticipated. So we have what is known as a revenue overrun. In other words, it's anticipated that we're going to be collecting, when the line is drawn at the end of the financial year, we would have a surplus in terms of our revenue collection to the tune of 20 billion rand. In other words, a revenue overrun, 20 billion rand more than we expected. Which is not a bad thing, and we can account this or attribute this, to use the correct word, to the better revenue collection by the South African Revenue Service, greater VAT collections as well, and then also greater or bigger collection in the personal income tax space as well as the corporate income tax space. So all of these things put together favorably have resulted in this projected revenue overrun, which leads me to my third point. When the government makes more money or receives more money, it has a tendency to spend more money. And what they've told us in this medium-term budget statement, policy statement, is that they will be spending a little bit more now as well, because they have this buffer or this leeway in terms of the revenue overrun. And here they will be allocating a bit more money to the South African Revenue Service to improve their systems for better collection. Not a bad thing, a good thing. They will also be spending on things like infrastructure and development a little bit more, which I think is quite important. But then, of course, there's also a bit of money now over to do other things like improve the parliamentary buildings to get that all fixed up. Our statistics department, stats SA, will be receiving a little more so that they can operate a bit more efficiently. And then, of course, as I said earlier, there's a bit of money that's been put aside, or more money that's been put aside for infrastructure and development as well as disaster relief. These are important things in our economy. And it's very pleasing that we now, with this overrun, can actually afford to do this. It doesn't mean that the government doesn't have to borrow. It continues to borrow, even though it now has to borrow less through the form of government bonds than it would have before, which is quite positive for our bond market as well, because it, once again, stands true to the rules of economics, supply and demand. So less bonds in circulation, bigger demand, obviously brings the price takes the price up and brings the yields down, which is good for our bond market overall. And our bond market, our fixed income market, has anticipated this, and we've seen a lot of positivity coming through in recent weeks, even months. So in summary, I think overall a positive tint to the medium-term budget policy statement overall, not only for the fixed income environment, but for the economy as a whole. And it does also mean that because the government now has a little bit more to play with in terms of revenue, it also doesn't have to service its debt as in such an extreme environment as it had to do before. It's a little less onerous, even though the debt ratios are going to go up this fiscal year, but it's anticipated that it will come down or taper off in subsequent years, which is also a good thing. It also has meant that the rating agencies around the globe are looking at us in a more positive light. As a matter of fact, on Friday, we had a ratings upgrade from S&P, which is also bode very well for our economy and country as a whole. We're not without our risks. There's still risk in terms of price increases and unemployment that we have in our country. Business confidence is still low. Consumer confidence is still low as well, but at least this medium-term budget policy statement has indicated to us that there's a lot more positivity than maybe we anticipated before. So that's where I'm going to leave it for now. There's lots in the statement and there's lots in the policy document that we can flesh out, but I'd like to leave these thoughts with you for now. So until next time, this is Sidney McKinnon, CIO of Cadiz Asset Management.